Welcome to the SMBU daily video. I want to talk about Fit, how I closed out my short position in Fit and why. And I want to talk about where we go from here in that name. I got a lot of responses from those that watched my video, our video last week on why we were shorting Fit. A lot of positive response, so let's do some more of that. So 3750, as we talked about last week, was the major technical level that we were looking at in Fit. Our thought process was if it could get below that 3750 level, the momentum to the upside would have dissipated, and then there would be momentum to the downside, and we'd watch to see when that ended and then close out our position. We're making a trade. We weren't making an investment to the short side in Fit. We were saying the momentum to the upside is done, and the next most logical move, most probabilistic move, was to the downside, and let's capture that opportunity. So we got short. We were in that play for in the money pretty nicely for multiple days as we looked at this as a swing trade. And then I want to talk about a couple of things that changed in that trade. So the first thing that changed in that trade was on Monday, when the market sold off precipitously. I thought Fit actually held in there very nicely. I actually didn't trade Monday. I was watching some closing charts on that, but it was hard to miss that the market was off a ton, off of the Greek issues, but Fit didn't really sell off as dramatically or as hard as we would expect it given how weak the market was. So first sign is, hey, it's holding in there pretty well in a tough market. And then we had a game-changing, for now, game-changing intervening fact. And that happens with trades. We're short, we love it, and then something completely different happens. And we have to adapt. And that's what happened in this name. RBC came out and spoke very positively about the stock, gave it a $45 price tag, and that caused that stock, which had closed near 33-ish, to gap up on the open of well above 35 and testing and bumping into that 36-ish area. So I'm sitting there, and we're talking about this in our mentoring session today. I'm sitting there and I'm saying to myself, I probably should have covered that name on Monday. The market wasn't so great. That stock didn't go down very much. I probably, even though I was away from the markets, I should have called up our floor manager and got out of that position. And I'm sitting on my desk, and there's nothing I can do about not calling up and getting out of the name as it's gapping up above 35 and heading towards 36. I can't do anything about that now. My ball for my short-term trading in golf parlance is in the rough, okay? Or it's in a divot. I got to play the ball where it lies. My original shorts are below 37.50, so I'm still in the money, but I'm definitely not as in the money as I would have been if I took it off into the close on Monday. But I just got to do the best I can from this trade, and that's a big challenge for trading. And so I said to myself, look, I'm wrong for not taking this off. This is not an investment for me. This is a huge growth story. I don't want to be on the wrong side of momentum in this name. This upgrade may be the trick, I'm not sure, but the gap up and the fact that it wasn't so weak the day before is enough for me. I want to wipe my hands out of this trade. How do I do it? So I actually covered into a down move around 35.62-ish, took the trade off, got flat, and moved on. And watched the stock, but wasn't particularly actively involved in it. Into the close yesterday, I said, and you can see from this tweet, I said, if this stock if Fit closes above 37.50, this is very bullish for the name. Remember, that was a big important technical level on the way down. Well, it's a big important level if it closes above there on the way up. IPOs are momentum-based instruments. Momentum to the downside, we want to be short. If momentum is now turning to the upside, we want to be long. These stocks move more than we can think. We don't want to get in the way of them on the way down and on the way up. We want to be with the momentum. And so you can see today that that stock closing above 37.50 changed completely the technical momentum, the overall momentum of the stock, and it had a wonderful, wonderful trade to the upside today. From here, what I'm looking for are those key levels. 37.50, that's a key level. You had an opportunity, you can see from the intraday chart, to buy that as that pull back into that 37.50-ish level. 40 is going to be a nice level. You can see on the chart, on our intraday chart, there was a tight consolidation around that 40. 40 was a past resistance level. There's a nice tight consolidation level there. Holds, it causes a move to the upside. So for right now, I'm leaning long because the momentum is to the upside, and I'm going to use 30. I'd love to find a nice basing around 37.50 with a couple of days going by and trade off of that level. We might not be that lucky. We might actually have to get that pattern around 40 and give it a run from there. I'm just making a trade. This is not an investment, even though I love the brand, even though I love the work that they do. I'm just talking about it from a trading perspective. We're going to use those technical levels. We're going to use the momentum. Our short idea is over. The momentum's to the upside, and we gotta look at the trade that way. That's the way I think through a trade. That's the way I thought through a short, and here's the way I'm thinking through a long. I hope that helps. Until next time, we'll talk to you soon.